kind of trader you want to be. But right now, I'll be showing you guys how to trade as a day trader. So the first thing you need to do when you open up your chart, like I used to say that you should open up my Forex Factory, or you can use FS Book to check the news for the day, to know if there's any news, high impact news, low impact news, and all that. So let's go to my Forex Factory. Let's see. My Forex Factory. Factory Forex. Something. So this is all about, I'm trying to show you guys briefly on fundamental analysis. Now, there was something I posted on my status. That was on Friday, NFP news. And let me see if I can take it back. Okay. Now, you guys can see that we have AUD, Euro, GBP, CAD, USD, and all that. Now, all these things now, you're just talking about the news that happened on Thursday. This is Thursday, August 4th. And they're showing you the currency pairs. That is AUD index, Euro index, GBP index, and CAD index, and USD index. Now, what about to call the actual? This is the actual, this is the focus, this is the previous. This is just like graph. But basically, we'll be actually talking about this actual, focus, and previous. Why? Because it's the most important thing we'll be dealing with. When you see this yellow folder, it means that it's a low impact news. So the news don't have much effect while trading. Oh God, let me see anything. Oh, sorry guys. So the news won't have much effect while trading and all that. Then when you see anything like a red folder, it means it's a high impact news. If you're using um, let me say FS Book or some other platforms to watch out for your news. And I think this time is not correct, because most times it used to be, let me say, sometimes we have news in the morning around 8, but this time actually is not correct. So now this is the currency. Now let's say you're trading Euro USD, and we have a major news on Euro, but impact news, so it won't really have effect in the market. So you can actually stick or still follow it up. Now we have the actual. Now, and the focus and the previous. Now what you're going to watch out for is this. Most times, always, not even most times, always, this actually is always empty. This particular area is always empty. So what you'll be seeing most times is your focus previous. Now your previous simply means that something that has happened in the past. Let's say the last time that they had a news pertaining trade balance or anything, they were having 15.02B as a figure. Okay, now they're actually predicting, this focus is just like prediction, that they're actually predicting that, okay, probably it will be less than maybe 14 point something. And now we're having actual, but actual hasn't happened based on the time. So you now have release cars and your or folks that the news is you. Now, if you look at non-farm payroll, we have a very high impact news. Now, I posted something on my status that if actual this is calling for actual, so it's linked. You know, analysis on Euro USD. It simply means that you'll be selling Euro USD since dollar is strong, because we had 528k, and 528k is greater than 250, 398 is greater than that. So you definitely know that, okay, fine, that the news release came out positive, and we'll actually be looking out for a sell opportunity on Euro USD. Now, you don't just click the sell button. That is where the technical analysis will come into place. Now, you now join your fundamental analysis, technical analysis to the market. Now, let's go back to, for me, you don't you need to do it on figures. I'm talking about this actual. Hey guys, hold on. Let me accept some persons. Ranging market. You have a low, higher high, higher low. Higher high, lower low, lower high for a down, telling you we also have a kind of market that moves sideways, something like this. So in this scenario, what you need to do is this, except you have a lot of experience, like you understand, to wait for a breakout out of this zone. This is just like a channel, something like this. If you're having markets like moving inside this channel, so what you need to do is just wait for a breakout like this, either to the upside one, or to the downside, So if it's to the upside, if you're having something like this, a pullback, having mitigation before flying, or if it's to the downside, you have something like this. So either of the cases, you need to wait for a breakout from the channel. You don't just pick it up or just adding within the ranging market, especially if you don't understand lower time frame or you don't understand structures very well. So I highly recommend you follow the trend. Now let's identify the downtrend or trend. If you can see clearly from this chart, the market is moving down, like moving down. So it's obviously a downtrend. So you pick it up, your low, your high, that is your lower high, this is your lower low. Okay, you look for another point again, a pullback, identify your trend, down to this point. So now when you identify your trend towards the downside, the next thing is you have to look for key zones. What are your key zones before you get into the trade? Like I said, the most important thing is you knowing your structures, knowing the direction of the market. Where is the market going to first before doing another thing? Now, after identifying your structure, let's identify our bullish trend also. This is for our bullish trend. A pullback, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, and higher high. Now, obviously, you know this is an uptrend. Now, you have to look for entries within this uptrend. Now, let's go to supply and demand. After identifying your trend now, I'm just trying to bring out everything bit by bit so we can connect them together. Now, our supply or demand, we also call it order block. We have the bearish order block and we have the before the sell candle that breaks it with an imbalance. The bullish order block is the last sell candle before the buy candle that breaks a structure with an imbalance. Now remember a structure. Let me draw it out again. This is your high, this is your low, and this is your high. Now, this particular move from this point, this low broke this most recent high. This is our breakout structure. So we had a break of this zone. This particular move from here broke this zone. So this is what we call a breakout structure. Now, identifying your order blocks, either the bearish or the bullish. So the bearish order block is the supply zone. The bullish order block is the demand zone. So we're only trying to change everything, just saying supply and demand, bearish order block, bullish order block, and the rest. So, like I said, like I said, this is the last. Like I said, this is the last sell candle. This is the last sell candle. This last sell candle before the buy candle. So I'm coming. Let me give you a practical example. Like we had, so we had the last sell candle here. We had the last sell candle here around this zone with an impulsive move that broke this high. This is a high. Yeah. So this is our last sell candle with an impulsive move that broke this zone. Now what is an imbalance? An imbalance is just a single candle or a candle without interruption. This is an imbalance. This candle you're seeing here is an imbalance. We had a very long candle without any interruption. Here is an imbalance. Here is an imbalance. I'll show you my example. Here is an imbalance. Here is an imbalance. Here is an imbalance here. So there are imbalances everywhere. But how do you use this imbalance to fix it in your trading? That is the most important thing. And it has to be in the key zones. So let me switch over to 15 minutes time frame. Now, after identifying your trend, the next thing you need to do is this. You switch over to your 15 minutes time frame. to start looking out for key zones. Now, this is the impact of the news that happened, the news release that happened on Friday. So now you now look for key zones. Now, like I said, after identifying your structure, let's identify one here now. We have, okay. So we have our low, we have our high, we have our low. This one did not break this most recent high, so I won't consider it a structure or anything. So I'll jump to this side. Then we have our low, then we have our high. But one thing you need to understand is that the market doesn't move according to drawings, like it must look straight and all that. So it moves in the way it wants to move like that. So after identifying your trend, you now scale down. Start identifying the last sell candle that is for an uptrend now, because you're looking for a bullish order block or a demand zone. You start identifying where is the last sell candle before the buy candle with an imbalance that breaks the structure. That is the most important thing. Now let's identify it. Look at this zone. We had a sell candle here with a buy candle. These are imbalances because it has an impulsive move without interruption. There's no wicks that had to fill all these places. So this is a structure. So now you draw this zone. This is your high. And this particular sell candle to buy candle with an imbalance broke this particular high. Hence, this place is our POI. Now, POI simply means point of interest. You now draw from the candle, that is from the sell candle, down to this zone. So let's draw it out. Oh, how am I using this? Hold on, guys. Sorry. Coming. So you now draw the last sell candle before the buy candle with an imbalance that broke this most recent high on an uptrend. So you draw it to the future. Now, when you draw it, look at what price did. In line with the trend, price respected this zone. You can see obviously what price did here. Move, pull back, gave us a break of this zone here to the upside, then returned back to this zone before pushing up. Can you see? Now, let's go back again. Now, price respected this zone before pushing out. Now, there's what we call refinement of OB. After identifying the last sell candle before the buy candle that breaks the structure, now you now mark out your zone, which I said your point of interest. You now mark it out, which is this zone here. And if you're using a risk entry pattern, what are you going to do? You just put in your limit order, which is your buy limit. Your limit order will be around 1.01594, and your SL will be around 1.01482. And you take the trade. So you just wait, price will just come in, tap in and move. But there are better ways of taking entries though. But I'm just showing you guys the basics. Now look at another point here. We had in line with the trend. Remember, I said the trend is your friend. In line with the trend, let's say having a structure like this before the push again. Now let's identify our structures here, our entry. We go back. Now the last sell candle, can you see the sell candle here? The last sell candle before the buy candle with an impulsive move Can you guys see the impulsive move that breaks the structure? And where is the structure? This is your structure. This is your high. Yeah. Now draw out your point of interest. And the last set candle before the buy candle that breaks the structure, you now draw all these zones. Now, where will your entry be? Your entry will be here. Your buy limit, because you're looking for buy opportunities. Your buy limit will be here, and your SL will be somewhere here. Now, your entry will be around 1.01670, and your SL will be around 1.01567. And look at what price did. So if you look for log positions, your entry is here. Let's say your TP will be the next high on the 15 minutes time frame. You see? So we're having like 10.4 pip SL. And look at our risk to reward, judging from the most recent. This is our point of interest. That is the area we're targeting for TP. So that's reward. That is, we're targeting 73.7 pip, risking 10.4 pip SL. So assuming you're using one standard lot, risking 100 USD, would have made over $730 in less than, let me check how many minutes is this. So in less than 15 minutes, you're out of the market. Just 13, okay, let's just say 30 minutes, you're out of the market, making $700 and something using a one standard lot, risking $100.4 in this single trade. Just simple, following the structure, following the trend. That is the reason why they said the trend is your friend. Now let's look for a bearish situation. Now in a bearish situation, remember these are 15 minutes time frame. I said you don't need to bother yourself about 4 hours daily and all that. You can just be catching pips once the market gives you your entry criteria. So you don't just jump into the market and start saying, oh, market is leaving me, is buying, is selling, other persons are buying, other persons are selling, and you're not doing anything. You just have to wait, be patient, allow the trade to come to you. So let's go again. We are having this is now a downtrend scenario. Like I said, the supply zone or the bearish order block is the last buy candle before the sell candle with an imbalance that breaks a structure. Now, in this scenario, we're having a lot of wicks. So let me just go down to 5 minutes. Let me see if I have body close and all that. To give you guys a perfect example. Okay. Now, you open your 1 hour, you identify your trend, you go down to your 15 minutes, you start identifying your trend and drawing your zones. Now, you guys can see clearly that this is a downtrend. You can see price pullback. Like I said, your chart won't be beautiful, so you shouldn't expect price to be going as though we're drawing a trend line. But you know that it's a bearish market pullback. And you can see this particular low did nothing. But we can just count it and fix it here, down here. Now we already know that this is a bearish move, so we'll be looking for sell opportunities. Like I said the supply zone or the bearish order block is the last buy candle before the sell candle that breaks a structure. Most importantly, it must break a structure in line with the trend. Now, let's go. Let me delete this. Let me delete all this. Okay. So, This is your point of interest around here. So we had the last buy candle before the second with an impulsive move that broke this low. Yeah. So the whole of this buy candle is your POI. From this buy candle here is your POI. So you draw it into the future. Now if you notice, price just, you look for short positions. Your entry will be here. You can drag it down. But what happened in this scenario? Price tapped in and start moving like this before finally falling down, like to go down to our direction. So, but there are a lot of other criteria like 15 seconds, look for perfect entries and all that. But this class is basically for like giving us the basics of supply and demand. So we're not really going into that. So I'm just giving you the basics, something you can just use and be trading. You can just start trading with it. So your entry will be here, your sell limit will be here, and your stop loss will be here. And you'll be targeting at least the next low, which is like 40 something pip TP. Now, if we scale down to this point again, you'll notice what price did again. We had a break this point here. This is a low, and this particular move from this point here broke this low. There's a last buy candle before the second candle that breaks a structure down to this side. Hence, that is the reason why price returns back to this zone. So let me just delete this. And that's the reason why I'm drawing this point here. Look at the last buy candle before the second candle that breaks this most recent low. This is the zone. Now, look at our low here. Broke this zone. Now, there's what we call inducement. All those things are just like basically for advanced classes. This is just like inducement. Inducement simply means that market makers will set a trap. You start seeing people trying to sell from this point here. And immediately they start selling. Oh, I'm in profit. And the next thing, price will just liquidate all of them. Then mitigate the main zones before going down. So inducement comes in form of equal highs, equal lows, trend line, internal trend line, liquidity, and all that. Those things is for just like you identifying liquidity. That's just like an advanced class. So I'm just showing us the basics, but I'm just giving a reason why I won't even take these zones here, because this is just like this is an inducement. So this particular buy candle before the second candle that breaks this most recent low. So we have to draw our zone, our POI to the future. And you have to wait patiently for price to return back to that zone. You look for short position. You put your sell limit, yeah? Your SL will be slightly above your zone, which is now, this one is giving us 4.5 pip. And then you target your next low. Let's say somewhere here. You're targeting like 47 pip, risking 4 point something pip SL. Now, look at what happened. Price returned back to this zone and tapped in and start falling again. Now, look at this zone. Price gave record highs, but then refused to return to this zone. Now, this particular zone, this indecision candle you're seeing here, it means a lot on the 1 minute time frame, but I'm not talking about that today. But price failed to return to this zone. Now, some of us will say, wow, the market is selling. Look at selling and had a push to the downside. But using this method I'm showing you guys now, using this strategy, there's no sell opportunity for us here, because I said the last buy candle before the sell candle that breaks the structure. This last buy candle before the sell candle did not break this structure here. This particular one here broke this structure but failed to return back to this zone. Let me draw out this zone. So we had a break to the future now. Now we had a break. The last buy candle before the second with an imbalance that broke this most recent low. Price failed to return back to this zone. So this zone now is useless to me. Now I'm waiting for price. Price is somewhere here, giving us another lower high, lower low. I will be expecting price to return a no. You have to follow what we call order flow mitigations. Now, what will I do? I'll now look for the most recent low again. Now look at, let me delete this. So remember I said it must break a structure. The last buy candle before the second with an imbalance that broke this most recent low. Look at it here. So I'll draw this place out. What are you going to do again? You look for selling opportunities. You put yourself limits here. It's giving us 4.8 pip SL. Perfect opportunity. So if you're using one standard lot, it means you're risking $40.8 to make at least, if you keep it here, which is 17 pip, you're making 100 and something dollars. If you're dragging it down because you're projecting that market will keep selling, then you make more. Let's just say 30 pips. So meaning you've made like $300, risking $40.8 on this particular trade. Now, after identifying this now, the next thing I'll treat is this. Refinement of OB. Now, let's go back to one. Our order block or your supply zone might be very big, that your SL will be very big. So for you to refine it, though there are disadvantages of refinement, though, most times price will almost mitigate you and it will leave you. So now, let's try refinement of OB. Let me look for a perfect example. Coming. Let me look for a perfect example. Perfect example. Okay. Okay. Now let's use this now. Now you can see I said the whole of this place. This is your last sell candle before the buy candle. Now we drew this place. And let's go to the 5 minutes. Let me delete this. Now 5 minutes time frame is showing us, look at the last sell candle before the buy candle that breaks the structure. You now drag your point of this rectangular stuff I'm drawing. You now drag it down to this point here. You fix it here. You go to 1 minute. Let's go to 1 minute. But let me not confuse you guys. Let's just go to 3 minutes first. Now when you go to 3 minutes, now let's calculate our pip. If you're starting from here, it's about 7.6 pip SL. Now, on your 3 minutes time frame using your trading view, we still had within our POI, just within our POI, we had the last sell candle before the buy candle within our POI. We now drag this rectangular stuff directly to this one here. We drag it to this point. Now let's calculate our PPSL again. The last one was 7 point something. How many are you seeing now? And you see we're having 3 point something PPSL. So we have now minimized our risks. So normally if we're using one standard lot and you're having 7.7 PPSL, it means that you're risking $70.7 But now using this refinement method, you're actually risking 3 pip to $30 from 70 to 30, which is fair enough. So you just you put your limit order. You put your limit order. Put your limit order. Down to this. So now, because of some persons now actually using your broker that you're using, spread factors and all that. So you consider your spread. Like for me, I do use raw spread, so I don't have much issues with spread. But for those who are using standard, you at least, since before you're having 7 point something per sell and now you're having 3 point something, you can just put it this way. Put it at 4.5 cause of spread to allow the market to breathe. Sometimes market and your brokers can use spread to take you out from the market and all that. Then price will start going to your direction. And you can see we're having a very good risk reward, which is 38 pip SL. 38 pip TP, and we are raising 4 point something pip. Or if you're using raw spread, you can fix it directly here. So you'll be raising exactly 3.1 pip using refinement method. So refinement method is just drawing your zones. After drawing your zones, you start identifying the last blocks within those time frames, just what I did here. If you scale down to 5 minutes, you see that now 5 minutes time frame, this is our POI. This is our POI. That's the reason why if you're following some persons, their charts, you'll be seeing within a particular zone, you'll be seeing H4 zone, 5 minute zone, 15 minutes zone, 1 minute zone. So they're using what to call refinement method. This is just what I just showed you guys, refined zones. And you see, so we had this. But disadvantage is this. Sometimes price might just react somewhere here and leave you. Sometimes price might just come into the zone and fly off. So I don't know if there's any questions. You can start asking you can ask your questions, so I'll know what to do and know areas that I can also tweet. So if you have a question, you can ask. Let's see.
Okay, boss. Thank you so much for the class. My question is, how do you place a limit order considering your spread?
How to create a limit order considering your spread.
Yes.
Okay. Now, I don't have meta trader. Yeah, because I don't use this part. I don't use my system to take trades. So now let's just do it this way. Do I explain this for you? Let's say your spread is, how will I even put it? For you to be on the safe side, this is your entry. Like I said, this is your entry. This area here. And normally you used to have spread something like this. Maybe difference between your spread is quite big. Like some people are using FBS, they understand what I'm saying. FBS spread is so big. Let's say something like this. So the best thing to do, let me not even draw this. The best thing to do is to just add 1 or 2 pip to your stop loss. 1 or 2 pip. Like I said, you're having something like this here. You're having 3.1 pip SL. And I'm considering your spread. you can just add, you can just make it 5. Okay, you can just make it 5 to be on the safe side, considering your spread. But for those who are using raw spread, you can still keep it here. It all depends on you. So I normally advise that you add 1 or 2 pip to your, considering your spread, to your stop loss too. Sometimes too, we're having issues of candlesticks and everything. Price will react here, but it will not pick you because of spread too. It will happen. So what you need to do is this, like your entry point. Let's say you're targeting, you're actually targeting this area as your entry point, this point here. So you just increase it, take it up a little bit, so that price will activate you. But just know that you actually, instead of you having 3 people SL, you're having 4.2. But still for your good, since you're using a standard account and you really want price to pick you. So you won't have those challenges of, oh, price did not pick me and all those things because of spread. So I think you should add 1 or 2 pip to your entry, or you should add 1 or 2 pip to your stop loss, just to make sure that you don't have any issues with spread, like spread taking you out of the market and all that. Yeah.
Hello, sir. I have a question.
Okay.
Thank you so much for the class. I appreciate. My question is, what are the characteristics of a valid order block? Like this thing I've been killing. Me. What are the characteristics of a valid order block? Like how do you know that another block is going to be valid? Another one is, what is I need a clear example of what a change of character is, and what do you expect price to do whenever there's a change of character. Another question is, what confirmation are you seeking to, do you want to see, what confirmation do you want to see whenever price enters your zone, or what confirmation do you want to see before you take any trade? And the last is, when you see pairs
No,
that are
no,
very volatile. Huh?
hold on. Do you know what we'll do here? Just okay. Just give me. Hold on a minute. Just a minute. So I'll handle each of them. Hold on. All right. All right. Sorry, I was trying to fix something. Now, your first question. Let's start with your first question. Can you repeat it back so we'll handle it one by one?
Okay, like what is the characteristics of a valid order block? How do you know that an order block is going to be valid? Like that's the
Now,
question.
first question. How do you know that another block is going to be valid? One, when you choose the other block in respect to a higher time frame, such as 4 hours, 1 hour. Do you understand? Like, let me show you something here. Now, this completely, this completely here is a 1 hour zone and is in line with your trend. Now, let me tell you something. No, there's no 100% zone. Nobody can tell that this zone is 100% sure. But I can, like, from experience, I can say, okay, fine, that there's every possibility that this zone will hold. But nobody can give you the full assurance that this zone must hold, because market can decide to do whatever it wants. Whatever. The market doesn't have emotions. Like if you look at what happened here, We had a break of structure to the downside here, but price refused to respect this particular zone. Instead, the most recent zone, price had to respect it in line with our 1 hour time frame. So there's no 100% assurance that this particular zone will hold, because sometimes price will be selling like this. There might be a news you don't know. It will just violate all these zones, and there's nothing you can do about it. But the only thing you need to use as a guide to yourself is this. You know that the last buy candle before the sell candles that breaks a structure with an imbalance in line with your trend, from a higher time frame perspective, it gives you a higher probability that that zone will hold. Secondly, when you use confirmatory entry, it gives you some assurance. Like for instance, confirmatory entry, we're having a zone. Let me see. Coming. Now let me give you okay. Now this is our zone. Yeah, like this. From the 1 hour perspective, this is our 1 hour perspective. You now scale down to 15 minutes. You allow price to tap into your zone like this. Some persons want price to tap in at least 50% of the zone, and this place is 50% of your zone. Now, some of us, some of us want to take our entry from here. One, from the entire zone. Some of us want to take our entry from the 50%. I'm someone like me, want to have confirmatory entry, something like this. Tap in, and I need to see something like this. Now, I'm having another brick of structure here. Then I'll now draw a POI. My new, because for this zone to be broken, price will definitely leave the last sell candle before the buy candle that breaks this structure. So I'll now have a demand zone around here. I'll now draw it again. So when you already probably are in this trade, me, I'll be looking for a more conservative way to be sure that most likely this zone will hold. Then my entry will be here for the long position. So instead of having 19 people SL from that point, look at what I'll be having. 4 point something. Now I'll now expect price to tap in like this. Push before the final push. But then there are times that, let me delete this. Okay. So there are times that price will just come like this. Tap, move like this, and then break it. So you experience that probably you're in profit and you lost the trade. That is another point. And there's what to call demand to supply. So in this scenario, someone like me now, I'll now look for opportunities somewhere here. Somewhere here. I'll now look for sell opportunities from this zone to sell it down. Well, that is something for another day, but I'm just telling you that there's no 100% guarantee that a particular zone will hold. But there's a high probability that a zone from a higher time frame perspective will definitely hold. Because then too, they're also respecting their zones. All these things is just investment, people putting their money, pushing the market to move either to the upside or to the downside. And also knowing your discount and your premium zone. So you buy from the discount level, you sell from the premium level. So that is it for that. Then your Your second question is, I think this is the second question. I've answered this one. So what is the second question or third question? Sorry.
You've answered them. You've answered them.
Okay. Then for that entry area too, you can have a more conservative. Like me, I used to use 15 seconds time frame. So when I have something like this is a POI. I have something like this. I'll now go to, that is 15 minutes price starting. Once price starting into my 15, this is my 15 minutes zone. I'll now scale down to 1 minute and I wait for something like this, a break. Now, this is a break of structure, right? On the 1 minute time frame. I will now see draw my POI on the 1 minute time frame here. The last sell candle before the buy candle that breaks the structure. I'll draw something like this to the future. I will now go back to 15 seconds time frame and see wait for this exact stuff. But then it's very fast. You see something like this. Internal break to have a very good risk to reward. Then I wait for the final push. That's when you start seeing me having like 1 PPSL, 1 PPSL 0 point something like that. I'll now have a push like this. Now, there are different types of entries. We have the risk entry, we have the confirmatory entry, we have the inception entry. Like this one, this particular one is inception entry. We also have what we call the some persons use what are they calling, taking out of liquidity, like liquidity swap and all that. So they must see something like this on their chart. So price must come, price should come, take people out first, then break a structure to the downside, pull back, then push. So they must see that stop losses have been like all these places. Your stop loss must have been gone. So you have something like this, and then your entry will be somewhere here. This for that, another entry chart patterns. There's another one that is just like this. So all you do, you keep picking out all those zones. Keep picking out all those zones. Just scale them out. So it's just up to you to choose what is very convenient for you, what you know you can use, or what you know is working for you. But the most important thing is in trading rather is this: having a very good risk to reward, knowing what you're risking, so you won't risk much, you won't be losing. You understand? So it's not something you just place your entries and all that, except you know your risk appetite. You know that, okay, fine, I want to be risking $50 per trade, and I want to be making $300 per trade, which is like 30 pips. So you know exactly what you want. So like me, sometimes I used to risk $10, $20, 15, 25 using a standard lot size. And then you might be risking 100, and I might even make more money than you. And sometimes if the trade should go against me, you'll be losing more, I'll be losing less. So all these things depends on how familiar you are with the chart. You keep building yourself, building an edge. You don't have to make your trading to be more complicated. You have to make everything to be simple. Like everything should be simple. So I see some persons trying to make things complex for them. No. Trading should be easy for you. So it should be something like, once I see this setup, once I see this criteria, I will take my trade. You shouldn't be scared of it. If you don't see it, even if anybody is making money, even if I'm the one, ignore it. Make sure you see what you want in the market before taking a trade. It's not something because you see people are buying. Everybody's buying. Well, let me just jump in. Fear of missing out. That is, fear of missing out and all that. So you don't need all those things. Frank has been emphasizing on waiting for trade like to get to you, like wait for them, come to a point of interest and you execute it. So even if you're losing or you had some level of losses, you know that you actually waited for your criteria to be met. Not something like you start jumping, just you see buy candle, start buying. You see sell candle, you start boss, the thing is retracing and all that. Normally you should know that in the market there must be retracement. Price cannot just be buying and buying and buying and buying. People benefit from pullback, retracement. Some people benefit from the impulsive move. So it all depends on your trading style. If you're a scalper, like me too, I do scalp a lot. So if you're a scalper like me, you can be buying when other persons are selling sometimes, because someone can be selling and there might be a brief buy before another sell opportunities. I might be buying. So that doesn't mean that your analysis is wrong or is bad. It just depends on what exactly you're seeing in the market. So I don't know if I've answered your question.
Yes, sir. Thank you very much.
All right. So I don't know if there's more.
Hello, sir. Hello, sir.
Yeah,
Okay.
okay.
Good evening, sir.
Yeah, good evening.
If now in an uptrend now or a downtrend, sometimes I go to 1 hour time frame to analyze one or two points or something like that. I will see a break of structure that has like two other blocks. Now one is the imbalance according to how you explain it
Yeah.
here. Consider. Or I should just manage to those and wait for what their reaction.
Now, if you're having two POI or two other blocks or two supply zone or two demand zones, now it comes with your entry type or your entry styles. If you're using confirmatory like me or any entry style, you wait for confirmatory at each of those zones before executing the trade. But let's just say you're using risk entry, immediately you say zone, you put your limit order and your SL and all that, and you take it. The best thing you can do for divide your risk. Let's say you're using one standard, you intend to use one standard lot to take a trade. What then you should just divide it. Let's say you're using one standard lot, so you should be using 0.5 first supply zone or first demand zone, 0.5 first supply zone or first demand zone. Instead of using one standard lot, each of those zones, like the first one standard lot, second one standard lot, just like let's say you intend to risk 50 USD for that particular trade. Now, if you divide it 0.5, it means that each position you'll be risking $25. So if the first one should pick you and it goes your direction, fine, you have made money. If price will evaluate that first zone and mitigate the second zone, you still make profit and cover up and cover your losses, and price will still go your direction. So that's I said, when it comes to risk management, after all this explanation, you'll be the one to choose what you want. You can say, okay, fine, I have big equity. I can risk first entry one standard lot, second entry one standard lot. It's up to you. But my candid advice is this: if you intend to use one standard lot on a particular trade and you're seeing two POIs that also giving you a good criteria for you to take them, divide your risks. Use 0.5, 0.5, or if you're using 0.1 lot size, you can use 0.05, 0.05. So anyone that picks you goes your direction. But the most important thing is minimizing your losses and maximizing your profits. So that is it.
Hello, sir.
Yeah.
I just remember one of the questions I asked. Please clearly identify what they call this, a change of character. When you see a change of character, what do you expect markets to do? When you see a change of character, what do you expect? the market to do. Like
A
I
change of
always
character,
confuse it with break of structure. I don't know.
a change of character comes in, or change of trend or whatever. It comes with you should use your higher time frame, at least for a starter time frame. Let's say these are 1 hour. These are 1 hour. Something like this. Now if you can recall, this is your demand zone, the most recent demand zone that broke this high, right? And remember that this is a 1 hour time frame. So what are you going to do? You need this most recent what are they calling it? Low to be broken. Now you need something like this. This side should be broken. From the 1 hour perspective, to be broken, then you have a pullback. Now this pullback, this is a change of character. Now this is what will confirm that we're actually having a change of character. Now this is a failed demand zone. So you definitely have a buy to sell candle that breaks the structure. So you draw your POI. Like I said, if you're using confirmatory, you will definitely see something like this before price move. But then you identify your change of character from a bigger perspective, for a bigger time frame. Let me see if I can identify one here. This is 1 hour. A case study. Now this is a perfect example. Okay. Let's see. Now I had a pullback upside. Now, can you see that this area, this low is most recent low from the 1 hour perspective that pushed price up. Now look at what price did. Price broke this low, and gave us a change of character. So you watch your change of character from a bigger perspective, from a bigger time frame. That is the reason why they said trading is patient. Like you have to be patient with yourself, patient with the method and your criteria. You don't have to rush into it. So you look at for your change of character from the bigger perspective. Can you see? So this particular zone here was our low. This is our high. So price broke this low. Gives us an indication that, oh, from a buy market, now the market is now selling. That is when you now scale down to your 15 minutes to start looking for entries. But if price should do something like this, price pulled back, failed to break this low and push up, we'll keep looking for sell opportunity and we'll keep looking for buy opportunities, except price should break this low again, this new one created like this, before we start looking for sell opportunities. If not, if price should do the opposite, price should do something like this. If price will fail to break this zone here, then I'll keep looking for buy opportunities until price breaks this particular zone, this low. I won't look for sell opportunities. So not because you're seeing a sell candle and all that, you start rushing, oh, I want to start selling. No, you wait for a clear break. That's where the patience comes in. You wait for a clear break of the most recent low before looking for sell opportunities. So I don't know if I answered your question.
Yes, sir. What tool are you using to map out your zone like that? What's the name of that tool?
I'm using, look at it,
Okay,
gain
grab.
box
Okay, grab.
and box. Yeah.
Thank you.
Maybe later on I'll drop the settings for in your inbox so you see it.
Okay, so much.
Hello, boss. Hello, boss.
Yeah, I can hear you.
Now, sometimes I see another block that has already been dated. He is dated. Now, does it mean that even when another block has already been, it can still be making sure it can still be valid?
Your background is very noisy. Can you please reduce the noise? I don't know. It's noisy. I can't hear you.
Sorry, sorry. Can you hear me?
Yeah, I can hear you.
Can you hear me? Now, I said
I can,
sometimes I see another block being used like 2 to 3 times. Like I will see like another block. I will just mark it out in a demand or supply zone. It will be mitigated like 2 times. Now I'm asking, does it mean that when you mark another block, even when it has already been used, that other block is still valid until it is broken?
no, if price has mitigated your order block, it's not valid. Sometimes market
It's no
makers,
longer
if
valid.
you watch, hmm,
It's no longer valid.
it's no longer valid now. Like for instance, look at this zone. Price mitigated this zone. Do you understand? Price doesn't have
Yes.
any reason to come back to this zone again. Sometimes they might just give you, me, I use that word personally. I think they just give us another opportunity for us to get into the trade. Sometimes price will just go up and mitigate you, come back again to your entry to take people out. Sometimes because most of us, let me tell you something, most of us, once price mitigate us and start going, we just put our stop loss at entry point. Do you understand? Price will come and take us again
Yes.
and start going. Do you get? That is the reason why most times we say,
Yes.
okay, allow price to go by 10 pips, 12 pips before doing your break even. Do you understand? But once price has mitigated the particular zone, that zone to me, I'm using the word to me, I don't know that person's, but to me it's useless. I don't use it again. Obviously now,
Okay.
price mitigated this zone and price do not respect this zone again. Do you understand? Look at price
Yes.
mitigated
Yes.
here.
Yes. Yes.
Yeah, can give you a lot of examples. Can you see? Even this zone you're seeing, here, that is price returned back to the zone. There's another block here. That is the reason for this buy. There's another block. So that is just it. So once price has mitigated the zone, I think is useless for us to keep putting the price to go
Okay.
back there.
Every one can see just to take people out.
Yeah.
And also for the hunters now. Now, okay, now you have to be looking for a new order block, either downward or upward now. So far, the
Yeah.
other one that you have already been
Yeah, you're
correct.
looking for
Thank you,
the
sir.
most recent order block.
All right, thank you.
All right. So I don't know if there's any question. If there's no question, then we call it a
I
day.
have a question.
Okay.
Uh, please, can you open your chat on that row USD? The last imbalance. Uh, if you are to mark out your demand, your supply zone, are you going to mark it out from that indecision candle, or there's one stuff that I was saying on the group, something about breaker block? I don't understand it. That the last.
Breaker breaker
Uh,
block is just like breaker block is just support and resistance. There's no big English in it. Those things are just English. Now let me tell you something. Look at this is a week. I think one of my classes on risk management, I said there are a lot of information in week. You can watch that video and get those information. Now we're having a break of structure here. Hmm?
yes.
Now I'll prove something to you. Let me show you something. Now, this now show you something. Now, to be very great, let's say I'm using risk entry. This particular zone, putting my SL here, I would have lost this trade. Well, now let me show you the good part of it. Let's go to 1 minute. Let's go to 1 minute. Now we have different breaks of structures. We have a break of structure with the body, and we have a break of structure with the wick. You understand? Now already, from my own knowledge, I know that now I've lost this trade though. Do you understand? Price hits me out, except for those who are using big SL. They might still be in the trade. But for someone like me, I would have lost this trade minus 2.9 p%. But now I'll scale down to 1 minute. Normally, I can also go to 15 seconds, but let me leave it here. 1 minute. I'll now consider the break with the week because I know the information. Our fundamental analysis is telling us that Euro USD will definitely sell from the news perspective. So now this will be my entry. This zone. I must re-enter this trade from this zone. Now, since I'm having a smaller PIP, SL and all that, they say sometimes you give market the room to breathe. So can you see something like this now? I'm having like 2 PIP SL. Do you understand? But now,
Yes.
I will just expand it a little. Since I'm having, like I said, if you're having 2 PIP SL, you can just give the market room for it to breathe. Now, this move, I'll definitely catch it. Though I said it, I was ill, so I was actually out of the chart. That was the reason. Now, to be very realistic with you, I said I would have lost this trade, this particular one. Do you understand? But I know that this area, all this area, are my, like, they are my zones. Do you get? I'll now still look for another break of structure again and still pick this trade down. So that is why I said, even if you lose a particular trade, and market is still giving you opportunities to buy or sell in line with your structure, look for entry. Have that confidence. Except you have gotten your normal daily drawdown. Let's say expected amount you want to lose in a day is 50 USD, and you have lost 50 USD, then you can rest. Or if not, as someone like me now, my maximum drawdown for the day is like $70 or $80. If I have such losses, I won't trade for the day until the next day. So I'm using a standard lot here, and I lost $20.9 on a standard lot, $20.9. Now that is minus 20 out of 80. I still have like multiple trades to take, and I finally got this entry and achieve is about 57 TP. So it means that I've gotten like 500 and something. So now $570 minus 20 point something dollars. It means nothing. So you just have to trust your analysis. You just have to believe in what you're doing. But that doesn't mean you won't experience SF because you're trading smart money or supply and demand. It's just your understanding and your confidence and your psychology, your risk management about trading that will help you. So telling you that with the kind of stop loss I'm using, telling you that I'll still be in this trade, I'm lying. But definitely this one, I must catch it. It's a must. So that is how it is. Hope I've answered your question.
Yes. So if I thought like now market is closed, if by Monday market is to reopen, to look for more selling opportunities since you're in a downtrend, is it that same zone I'll mark the
Like now, you're
support
having,
level? Oh, okay. I'm just in this part now. I think I get.
yeah, do you understand now?
Yes, I understand. I didn't see this part.
Okay. All right.
Question, sir.
Please.
Oh,
Question.
all right.
My
I think this
question
is
is,
the last question for the day, oh, so it's quite late.
okay. So what is the best time as a newbie? That is the best time and time frame to draw our zone from. Like now, market is open on Monday. Are we supposed to draw our zone on Sunday night, or we wait till market open before we draw our zone? That is number one question.
Let me answer that first before you go to the second one. First
Okay,
of
sir.
all, we have the Asian section, we have the London section, we have the New York section. Do you understand?
Yes, sir.
But I advise you to trade the London section, which starts by 8 o'clock, and the New York section, which starts by 1 o'clock. Do you understand?
Yes, sir.
Now, for me, I would say advise you that you shouldn't draw your zones yet from on Sunday. Wait for
Okay.
the Asian sections to play out, because mostly everybody knows that Asian section is for manipulation.
Yeah.
Now, sometimes Asian section will buy and finally to sell. Do you understand? During
Mm.
London section or something like that. So market will definitely present itself to you during London sections. So once you get to London section, you go to your 1 hour time frame. You now identify your trend. You understand? You now
Yes, yes.
identify your zones. You scale down to 15 minutes, scale down to 1 minute. You refine your OB or you look for confirmatory entry. Whatever might be your entry type, use it in taking your trade.
Yes, sir. Okay. Now, this in terms of this news, now you talk about news, which is very very important, because to me, before, if I just check high low, I don't know what that one means. But today, I think I get the actual and the other thing. So you would should throw more light on it. Yes. My question now is, maybe market is uptrend, is in uptrend. When you draw your zone, the market was in uptrend, and now the market, the news has come. Maybe you draw your zone around 8 or 9 or 8:30, and the news come around maybe 10. Now you draw your zone now, Euro USD to buy. That is your quote and your this thing. You draw Euro, you got USD to buy Euro. Now yesterday, as news happened now, already if you mark your zone already, that if market get down to this your demand zone, yes, you should buy up from your supply zone. You should buy up. You already draw, but you are not. You don't want to take a trade from that up, from that supply zone to your demand zone. And now news happen. Are you going to, because of that news, and you buy to downstairs before you make your sale? Because already you want to buy. Are you going to sell from down because of the news, or you follow your trade, which is uptrend, before the news happen?
Now we're able to call the pro trend and the counter trading. Do you understand? Now a pro trend is when you're following the actual direction of the market. A counter trading is when you're going against the direction, meaning that you look for opportunities when market is retracing. Just like we have our impulsive move, correction, impulsive move and correction. Now it depends on your level of experience in the market. Do you understand? Like there are some persons that only trade on 1 hour, 15 minutes as an entry. Me as a person, I scale down to 15 seconds to trade. See, so it all boils down to understanding about the chart. Do you understand? So you might decide to wait for price to get your demand zone before you buy officially, or if you understand counter trading, then you can actually look for selling opportunities down to your demand zone before taking the main trades. So it's just up to you, depending on what you know your knowledge about the market.
Yeah, I get your point now.
All right, no problem. So guys, I think we'll have to round it up here.
Yeah, the news you talk this news. I come late. I only hear about the actual and the, yes, only
So
actual. I don't know
what
anything.
happened
So
about the news that this particular call is on record. So by tomorrow I'll drop the link. You can actually go through it back so you get everything.
okay, sir.
All right. Thank you
God
very
bless
much.
you. About twins now. I don't dey pray for you since. So for twins now, you go knock.
So I think we'll just call it a day, yeah. And thank you guys for joining the call. I really
Right. Thank you
appreciate
very much. Thank you for the open
it.
eye. Please, we have learned a lot.
Of course.
Yeah, thanks
I
so
beg,
much.
pray for us. So pray for us. Make we get money, pay for normal class. All those things. Make we do small, get money, pay for normal class. All this one. No